Hello, there's been a powerful reversal in fortunes for some countries and their businesses as economies reopened in 2021. But as activity took off, so too have concerns about how governments and central banks can adapt the extreme policies that have helped to drive that growth. What to expect in 2022? How should investors prepare? Well, here with some answers are the Chief Executive of Fidelity International, Anne Richards, and down the line, our Global Chief Investment Officer, Andrew McCaffrey. And welcome to you both. Anne, I'm going to start with you, if I might, because I mentioned extreme policies. We had the monetary stimulus that really helped to drive economic growth. Given all of that and the changing circumstances, what would you do as a central bank governor in 2022?
Gosh, what a question. I think the first thing to say is that the speed of the response of the central banks in 2020, when the crisis really hit, was quite remarkable. And I think we saw a great deal of imagination, of creativity, and that pace of response, which was unprecedented and really necessary and has been extremely effective. To your question about what would I do as a central banker, because this is such an unprecedented period, because we have been using tools of monetary policy that are very different to what has been used in conventional cycles in the past, I think central banks should exercise a degree of caution about making sure that the inflation spike that we're seeing is not more transitory than anticipated. I think there is a structural element to it, but I think there are elements that are a direct consequence of this concertining of the economic cycle. Therefore, I would exercise a degree of caution about not moving too far, too fast on a rising interest rate cycle right now.
So careful steps from you, Anne, as our new central banker. Andrew, as you watch this scenario unfold, we haven't been here before. What do you think are the risks which central bankers really need to watch? Where could there be a policy misstep?
So I think, as Anne has laid out, is that it does create a circumstance where the risk of policy mistake, i.e. moving too quickly, as we see still more on the economic developments take place that we just don't understand today in terms of both its longevity and also the extent of impact, whether that be inflation, but also the fact that we've seen enormous stimulus, which is going to hit a little bit of a cliff as we go into 2022. And how are they going to fill those gaps, especially if you see some of the monetary policy support being pulled back as well. On the other side, it really is a case of that if we do see that some of the supply chain challenges actually start to become much more ingrained, as we see the whole climate change decarbonisation programs that will be rolled out, and what that means as well for broader material use, for restructuring in economies, and the consequence of that is how central banks navigate these very different and new challenges.
Well, thank you. And you mentioned decarbonisation there, Andrew, and Anne, Andrew's pointed out the risks around it, but you actually take a slightly more positive view about the possible opportunities that these necessary changes offer.
I do, and the reason for that is I think essentially, I've been in the investment world for 30 years. I have never seen in that 30 years the pace of change in technology really focused in multiple different ways of addressing the climate change challenge. And I think we are on the cusp of, well, we had the fourth industrial revolution just a few years ago. I think this is, in a way, a fifth industrial revolution. At multiple different points along the way, we can see tremendous innovation coming through. And our challenge, of course, is how we scale that, how we industrialize that, how we drive down the cost curve so that we make a transition to a less carbon-intense economy, a just transition, and there's some big policy decisions around about that. But I do think that this innovation cycle that we're on is immensely exciting and is opening up a world of investment opportunities to help us with this shift, which is so important if we're to get anywhere close to that 1.5 degree pathway, which we know was a key objective of COP.
I can see, Andrew, you're nodding as you listen to Anne. How should investors change their allocation overall to respond to the changes that Anne's setting out?
So I think there's a couple of ways, Richard, that they really need to think in. One is at strategic asset allocation level, is that how are we going to see capital allocated investment opportunities that will be playing out, and what does that mean as you look around the world, as you look at individual sectors, and as you look at the different types of assets that you can invest into. And I think this gives enormous opportunity still in areas of technology, but also linked to areas of physical assets as well, looking into infrastructure, looking into elements of including what will be part of the building out of the program in the years ahead. And that, I think, has a significant influence in thinking through an asset allocation framework. But secondly, is that when you look within those asset allocations, again, being very much towards what are going to be aligned to policy and to those investment opportunities that are, some are new and some are well flag posted by what we're already seeing in terms of the plans that countries are laying out. And I think that's quite exciting, when you look around the world, and in all honesty, to look into China or Asia as well.
Well, I was going to ask you actually. We've talked about asset classes and the changes of the companies making up those asset classes and the different opportunities. But what about the different countries and regions? Are there any changes as you look at 2022 of where you would be putting your emphasis?
So I think that one of the things that really stands out is that substantial outperformance that we've continued to see from the US and to a degree from developed markets. And yet, as we look ahead, one of the things that is quite exciting from what we've seen in China, and for that matter part of Asia, is that a repositioning for more sustained, more resilient growth over time. And I think that will also throw up opportunities. And when you look at the relative discounts of where markets stand, especially in the equity markets, but also when you look at debt markets and the real yields available, the policy settings, again, that sort of draws you towards looking at China and Asia. In that, as we look ahead and look at the sort of fundamental setup of current accounts, of economic policy, of more sustained growth, still the development of technology, and on the back of middle class incomes going up, there seem to be a lot more opportunities that we see that could be developing in 22.
And final word to Anne. Andrew's been setting out the different positions within the major economies. But if we look at the competition between them, the technology arms race perhaps between the US and China, there is an upside to that as well, isn't there? Does that augur well for the decarbonisation, for the transition? I
think one of the things that shifted in 2021 was the realisation that the jobs that were being created in the new economy, in the economy of the fifth industrial revolution, is a really powerful economic stimulus. I think there's also a realisation that you don't solve the planet's climate challenges if you don't bring in some of the major economies like China, like India, if you don't bring them into the equation. And one of the things that links them all together is this desire to create those jobs, this desire to own the new technology. And in this context, competition is your friend, because it's the healthy competition between what different countries, what different companies are trying to achieve that will really take us to those breakthrough technologies. So I think it does augur well. I think that desire to do new and better things is a really healthy stimulus in this context, and it will surprise us potentially in where we get to in solving some of the climate challenges that we face as a planet.
A lot of challenges, but a lot of new ways of tackling them perhaps as well. Anne, thank you very much indeed. Andrew, thank you for joining on the line. And thank you for watching. You can get more detail on Fidelity's 2022 outlook with commentary on all asset classes from our Chief Investment Officers and Economics team at your local Fidelity website.